reforms that are needed, to strengthen the regulatory framework and improve corporate governance in the capital market, just to make it, more efficient and, like you said, better than 2024.
Yeah, thanks so much. Talking about the reforms for regulation, I think Dr. Gama will be in a better position to speak to that. He has already said we are happy that the Investment and Securities Bill, has been passed. Of course, it contains a whole lot that will help strengthen the market. Now, speaking about 2025, I am very optimistic. I'm bullish that 2025 will be a lot better, not only in terms of the market, but even, in terms of the economy, as a whole. Remember, too, the performance of the market is also a function of the economy. Okay, the economy also determines to an extent how the market performs. And the other day I was looking at I was listening to a speech by the IMF MD, Mrs. Christinina, who was, talking about a steady economic growth, for the world globally. On the 17th of this month, the IMF will be releasing their World Economic Outlook. So it's expected that the world economy will maintain its, growth steadily. It's also expected, according to her, that globally, on the average, the world will experience disinflation. Disinflation means that the inflation rate will be on the downward trend. We are also beginning to see that in the US, in the UK, in the Euro area, which is also why, even in the US today, the inflation rate is getting close to the Federal Reserve's, long-term target of 2%. So when inflation is coming down in these economies, developed economies, interest rates are coming down, it is positive for Nigeria. Okay, because on a risk-adjusted basis, investors will want to come to Nigeria to invest. So if you look at it globally, the local market, our domestic market, will benefit from all these developments, globally. Now, talking about locally, again, if you look at what they have put in place so far, on the part of the central bank, for example, we expect that in 2025, central bank will not only pause monetary policy rate hikes. I expect that there will be a pause even from this January. And by, say, second quarter or third quarter, we expect to see even easing of monetary policy. Once you begin to reduce rates, monetary policy rates begin to come down. That's also positive for the equities market in particular, because investors will now want to do more of equities. Then there is also the issue of banking consolidation that is still going on. Banks are still coming to the market to raise funds. Access Bank has been able to do that. Other banks are also following suit. That's also a potential for 2025.